Mark, what do you make of it? What are markets missing? What do we need to be paying attention to as perhaps the next leg or the next signal or the next risk?
Good morning, Critty. I think one of the things that's really interesting is that everyone is getting very excited about the shipping from China to US a couple of weeks ago, in kind of late April after the tariffs were imposed quite aggressively. And then everyone stopped watching those kind of trackers because we were seeing a little bit of a bounce back from extreme levels. Well, in fact, just this week, we've now seen fresh lows dipping in that terms of total laden tonnage going from China to the US. And I think this backs up the story that the real kind of tariff impact will be felt by consumers probably towards the very back end of May, maybe really into June, and maybe even the first couple of weeks of June, which means this shock from the US-China trade war is still coming, and it's still going to be really, really extreme. It's just hitting later than everyone thinks. So which means if it starts hitting consumers and the shelves in June, it means we may not really see the kind of the impact in hard data until we see it show up in the June data, which means we won't get those releases until July. So it's a very, very hard dynamic to trade. I think the long-term trends remain very clear, but short-term, we're waiting for the next catalyst.
I mean, talking about those data points that people are missing, Mark, I also noticed that shipments of smartphones, including Apple iPhones, from China into the US are down more than 70% in April, for example. So I want to ask about these points about this consumption story. Where are markets mispricing or underestimating that risk? Where should we be looking next?
Well, I think that in terms of where it's going to impact, I think that this is going to be most importantly, in fact, an inflation story, a yield story. And as we know, yields have been a focus already because the tax bill, the fiscal situation concern there. But I think you might suddenly get a much bigger inflationary impulse than people were expecting because we've had some quite subdued inflation prints recently. I think people are misinterpreting the trend there. So I think that that's actually going to show up in a yield story next. So, you know, the US underperformance kind of trend has worked very well for the last few months. The initial leg was kind of stocks. The more sustained leg has been the dollar, kind of, we talked about that earlier on this month. I think that the next leg might be maybe in June, July, might be more the yield side, the bond side, okay, well, underperforms. If they underperform enough, then it'll filter into stocks as well again.